Hello everybody, welcome to this session on GST. Today we will be discussing about e-commerce under GST. Electronic commerce or e-commerce has transformed the way business is done in India. In the current tax regime, the e-commerce industry in India is faced with the levy of multiple taxes. Every state has imposed its own set of rules and taxes on the e-commerce industry. The lack of clarity on the tax treatment of the various types of e-commerce transactions and new aspects such as e-wallet and cashbacks has resulted in a chaotic tax environment for the industry. E-commerce firms are looking forward to the implementation of GST in the hope of greater clarity and removal of state-specific rules and levies. The GST law recognizes the need for rules specific to the e-commerce industry. Today, we will discuss about the specific provisions with respect to e-commerce in GST. E-commerce means supply of goods and/or services, including digital products over a digital or electronic network. There are two entities involved in an e-commerce transaction: the e-commerce operator and suppliers on e-commerce platforms. Let us first learn about them. An e-commerce operator is a person who owns, operates or manages a digital or electronic facility or platform for electronic commerce. Common examples of e-commerce operators in India are Flipkart, Amazon, Snapdeal, etc. Suppliers on e-commerce platforms are persons who supply goods or services on an e-commerce platform. So, all the persons who supply through Flipkart, Amazon, Snapdeal, etc. are suppliers on the platform. Let us now look at the provisions with respect to e-commerce operators in the GST law. All e-commerce operators are mandatorily required to register under GST. This means that irrespective of their turnover, they must register. Certain service categories may be notified, on supply of which tax shall be paid by the e-commerce operator and not the supplier. In this respect, if the e-commerce operator does not have an establishment in a state, any person representing the e-commerce operator for any purpose in the state will be liable to pay the tax. If the e-commerce operator does not have an establishment in a state and also does not have a representative in the state, the e-commerce operator should appoint a person in the state for the purpose of paying tax, and this person shall be liable to pay the tax. Every e-commerce operator should collect tax at the rate of 2% on the net value of taxable supplies made through their platform, where the consideration with respect to the supplies has to be collected by the operator. Let us now understand how to arrive at the net value of taxable supplies on which an e-commerce operator has to collect tax at source at the rate of 2% every month. Net value of taxable supplies is equal to value of taxable supplies made by all registered taxable persons through the operator other than notified supplies on which tax is paid by the operator minus value of taxable supplies returned to the suppliers. So, supplies on which tax is paid by the operator must not be included and value of taxable supplies returned must be subtracted. Let us see an example to understand this. Fast Deals is an e-commerce operator. Rakesh Private Limited and Rohan Private Limited are suppliers on Fast Deals. We'll now see the outward supplies register of Fast Deals for the month of October 2017. We'll see the suppliers who have made supplies through Fast Deals, value of taxable supplies and taxable supplies returned. We'll then arrive at the net taxable supplies of Fast Deals and the TCS to be collected at the rate of 2%. Rakesh Private Limited has made taxable supplies of Rs 1 crore through Fast Deals. Supplies returned are for value of Rs 10 lakhs. So, the net taxable supplies of Rakesh Private Limited is Rs 90 lakhs and hence TCS collected at the rate of 2% is Rs 1,80,000. Let's now look at the other supplier, Rohan Private Limited's supplies. Rohan Private Limited has made taxable supplies of Rs 2 crores and taxable supplies returned are for value of Rs 20 lakhs. So, the net taxable supplies is Rs 1 crore 80 lakhs and hence the TCS collected at the rate of 2% is Rs 3,60,000. The total taxable supplies of Fast Deals in October 2017 is Rs 3 crores, out of which returns are for value of Rs 30 lakhs. The net taxable supplies value is Rs 2 crore 70 lakhs and total TCS collected is Rs 5,40,000. We hope that you all have been able to understand how to calculate the net taxable supplies of e-commerce operators. Let us now see the returns and tax payment process for e-commerce operators. On 10th of every month, an e-commerce operator has to furnish Form GSTR 8 containing details of outward supplies through the platform in the previous month, including supplies returned. In Form GSTR 8, invoice-wise details of supplies to registered taxable persons and aggregate value of supplies to unregistered persons must be provided. The e-commerce operator also has to pay the tax collected from suppliers. In the example we had discussed earlier, Fast Deals furnishes Form GSTR 8 for October 2017 on 10th November 2017, showing the net taxable supplies of Rs 2 crores 70 lakhs and has to pay the tax collected from suppliers of Rs 5,40,000. By 31st December of the next financial year, an e-commerce operator has to furnish the annual statement of the supplies made through the portal and the tax collected in Form GSTR 9B. Supplies reported by the e-commerce operator and suppliers on the platform will be cross-matched by the last day of a month. If there is any discrepancy between supplies reported by the e-commerce operator and supplies reported by suppliers on the platform, the information is made available to the e-commerce operator in Form GST MIS 4. The discrepancy reported must be rectified in the return for the month in which it is communicated. In our example, Fast Deals furnishes Form GSTR 8 for October's supplies on 10th November 2017. If a discrepancy is reported in Form GST MIS 4, it must be rectified in the return for November 2017 to be filed on 10th December 2017. Now, let us look at the provisions with respect to suppliers on e-commerce platforms under GST. All suppliers on e-commerce platforms are mandatorily required to register under GST. Hence, even e-commerce suppliers whose aggregate turnover does not exceed the threshold limit for registration will have to compulsorily register. A person who supplies goods or services through an e-commerce operator will not be eligible for registration under the composition scheme. Even if the person's aggregate turnover does not cross rupees 50 lakhs, he or she does not have the option to become a composition tax payer. A supplier on an e-commerce platform has to follow the return process applicable to a regular dealer. We have covered this in our previous session on GST returns. In addition to the general return process for a regular dealer, a supplier on an e-commerce platform must, on 10th of every month, furnish Form GSTR1 showing details of outward supplies made through e-commerce platforms. In Form GSTR1, invoice-wise details of supplies to registered taxable persons and aggregate value of supplies to unregistered persons made through the e-commerce platform must be provided. On 11th of every month, Form GSTR2A will be made available to the supplier. The aggregate amount of tax collected by e-commerce operators in the previous month will be auto-populated based on Form GSTR8 filed by the e-commerce operators. In our example of Fast Deals and suppliers on Fast Deals, Rakesh Private Limited and Rohan Private Limited have to furnish Form GSTR1 showing net taxable supplies made through Fast Deals in October 2017 by 10th November 2017. Rakesh Private Limited furnishes net taxable supplies of rupees 90 lakhs and Rohan Private Limited furnishes net taxable supplies of rupees 1 crore 80 lakhs. On 11th November, based on Form GSTR8 filed by Fast Deals, Form GSTR2A will be made available to Rakesh Private Limited and Rohan Private Limited. Rakesh Private Limited receives TCS credit of rupees 1,80,000 and Rohan Private Limited receives TCS credit of rupees 3,60,000. On 15th of the month, a supplier has to furnish Form GSTR2 in which the details of tax collected by the e-commerce operator can be accepted or modified. The tax collected will be credited to the supplier's electronic cash ledger on provisional basis, which can be used to set off the tax liability. By the last day of a month, Form GST MIS 3 is made available to a supplier. Any discrepancy in supplies furnished with supplies reported by the e-commerce operator will be shown. The discrepancy must be rectified in the return for the month in which it is communicated. If not rectified and the value of supplies furnished by the operator is more than the value furnished by the supplier, the differential amount along with interest will be added to the tax liability of the supplier for the succeeding month. In our example, Rakesh Private Limited furnishes Form GSTR1 for October's supplies on 10th November 2017. If a discrepancy is reported in Form GST MIS 3 on 21st November 2017, it must be rectified in the return for November 2017 to be filed on 10th December 2017. With this, we have covered the provisions with respect to e-commerce under GST. We have seen the specific provisions relating to e-commerce operators and suppliers supplying through e-commerce platforms. Note that on the date of GST implementation, that is 1st July 2017, the deduction of TCS by e-commerce operators has been deferred and will be applicable only from the date that the government will notify. As a result, e-commerce suppliers whose turnover does not cross the threshold limit do not have to register until the government notifies so. To learn more on GST, you can visit our blog blogs.tallysolutions.com. You can also download our app Tally for GST from the Play Store. Thank you.